afternoon, guys. Currently, you can see time is around 4:49. Let's look at Bank Nifty as well as Nifty 50 trade analysis. First, let's look into Bank Nifty. As you can see today in Bank Nifty, the market showed a decent amount of price action. When you compare it to yesterday, you can see the market rallied up here after consolidating this kind of consolidation. And there was a huge bullish momentum. Price took support from this 50 level as well as 200 moving average and continued further bullishness, but couldn't cross above this high. And the market kind of consolidated in this zone itself. But you can see here that today the market targeted all those buyers here. So whosoever might have entered the market here, looking at this gap down, might have exited their position, and the market is rallied up towards yesterday's close price. And you can see yesterday's close price resistance as well as pivot resistance as well as the 200 moving average here. It all acted as a good resistance, guys. But one thing I have told you yesterday is that whenever the market clearly shows this kind of pattern like this, you can see this kind of pattern, guys. The same kind of pattern you might have seen here. It's also the market is trying to bullish. You can see the market facing rejection and this kind of impulsive momentum. All this momentum has been consolidated with small candles like this. If you try to see this candle over here, like this to this kind of pattern over here, this exactly looks like bearishness, guys. So as of me, I took my short position just at 921 itself, looking at this bearish engulfing candle, keeping my stop loss just above that candle itself, guys, or the pivot level or the 200 moving resistance. And I would have targeted, if you compare the low to the high of this candle, you can target all the way to 2.68 level. This is the 2.68 level. You could have tried all your way to 2.68, guys. I think this, the way I'm saying, looks very simple, but what one thing you could have done is that this 200 moving average resistance, guys, which actually is very significant. But one thing we need to keep in mind is that there could have been this kind of expectation that the market might have gapped down and take rallied up all the way, breaking even the 200 moving average towards the upside. But before this 200 moving average being broken, you can see market trying to take support from this 9 moving average and formed a bullish engulfing pattern, trying to break this high and clearly price sustaining above the fib of that candle. If you try to plot this fib, you can see clearly price sustaining above this fib, clearly indicating some sort of bullishness only, guys. So in case if you might have thought the same pattern would have applied here, you can see here the market gap down and you could have expected the market to clearly move towards the upside with this bullish momentum to this bullish momentum, continue further bullishness. A lot of buyers might have entered like seeing after this bullish momentum, but what you can see is that here the market faced resistance from the pivot levels over here, the 200 moving average as well as yesterday's close price. All these three acts as a very strong confluence for you to take short position, guys. So in case if you might have lost your trade or lose, you could have just lost, kept a stop loss like 30 to 40 pips, guys. Or you could have targeted all this way to 1.68 level, or in case if you might have holded your trade, you could have moved all the way to 2.68 level. When you see this kind of retracement, this is just a retracement, guys. When price couldn't cross this pivot levels, you can see the market you could have drawn the fib levels here, and you could have targeted all the way to 2.68 level. You can see how the market came all the way here, took support and rallied towards the upside. As you see here, the market is trying to consolidate here, but this momentum also, you can see market clearly broke this structure high, structure low, clearly indicating shock formation here. And you can expect this kind of retracement from this zone and continue further selling towards the downside. As you can see, the last up candle before the down move, you can consider this, or you can consider this to the common point between this. You could expect this 50 level resistance over here, or in case I will show you guys, you can see this is impulsive momentum towards the downside, which formed chalk here, and you can see further price took support and broke towards the upside. This also is a chalk formation over here. So the market broke towards the downside, towards the upside as well. But one thing we need to keep in mind is that you can see this kind of consolidation, and with this kind of momentum consolidation towards the upside, the market came down, clearly indicating some sort of bullishness. If you try to plot the fib levels, the order block level here, this you can consider this to be the 1 minute order block over here. So you can extend all this 1 minute order block all the way to this zone. So you can see here the order block got mitigated over here, but I'll come to that afterwards. You can see the market, if you try to plot the fib, the anchor VWAP level, you can see price clearly broke towards the downside, acting as no support over here. But one thing you need to keep in mind is that you can see this kind of momentum. After that, clearly the market unexpectedly broke structure towards the upside, again towards the upside. This is internal break of structure. And if you consider this break of structure to be impulsive, and if you try to plot the fib levels, the common point between this to the common point between or the high, since it is a blue as well as this blue zone here, you can see here the price taking support from this 0.38 level over here. This acts as a very strong support, guys. So in case if you consider the market trying to break towards the downside, and if the market sentiment would have been bearish, the market would have found some sort of resistance here or some resistance here and couldn't cross this level, guys. But here you can see the market found a strong support here because of this support zone here. You can consider this zone over here to be some sort of demand zone, as a lot of buyers might have entered this market over here. So the market came here all the way take to from this demand zone and found a choke here. And here it formed a bullish engulfing pattern over here. You can see the market engulfed the previous candle, clearly indicating some sort of bullishness. In case if you might have been very vigilant of how market behaves, you could have entered long position after seeing this bullish engulfing pattern itself. As you can see, there is a demand zone, keeping your stop loss just below this demand zone itself. And if you try to plot the fib extinction levels, the high to this high to all the way to this high, you can target the 100% move. This is the 100% move. But what we need to keep in mind is that you can see this is actual retracement. So in case if you try to plot this retracement, the common point, the high between this to the high between this to the high between this is the 1.68 level, guys. This is 100% move. You could have exited after this bullish candle, or in case of 1.6, you could have exited at this candle. But let's keep in mind, guys, our risk to reward ratio though is very important. So you can see here, as you can see, price taking support, rejection of price from this 21 moving average here. Here you can see three rejection of price from 21 moving average, clearly indicating some sort of bullishness. In case you might have taken long position, you could have kept just below this 0.38 level and targeted all the way to 100% level here. This is how one scalp you could have taken. And in case if you find this kind of support here, you can see anchor wave up level. Here the price is rejecting. Here also the price is rejecting. And this anchor wave level would have found a strong support in case if you wanted to take the trade. And if you try to plot another anchor wave level, guys, you can see this kind of bullish engulfing pattern. So in case if you find this bullish engulfing pattern over here, you can see here the market faced rejection of this of this anchor wave level, and again it faced rejection over here. But after this break of structure, you can see the same anchor wave level forming support over here. You can see there is three confluences, guys. One is this anchor wave level, one is this anchor wave level, one is the 9 as well as the 21 moving average. You can see a lot of confluence here. Why you should take long position here? Just I am telling you in case if you need a better confluences of why you need to take long position. So I'll just skip this out. So you can see how here it faced rejection, here it faced rejection, here it faced the same anchor wave level here. You could have entered short position also here, seeing this kind of rejection when you have placed this anchor wave level. You could have taken short position here, or in case here also after this rejection candle, you could have taken short position and just done a small scalp also. Or in case if you had a good price action of how market behaved, you can see this kind of consolidation and price rejecting from this 9 moving average and closing below this and clearly indicating bearishness. You could have taken long short position here also, guys, and targeting here also scalp. I think you could have made a decent amount of profit with this kind of swing also. So I hope you're getting what I am saying, guys. So why you should take this trade after this impulsive momentum. First impulsive trade is this, guys, and after this is this. So you can see here there is a fair value gap here. So the market came all the way to this fair value gap here, mitigated this zone. So this doesn't, and you can see this anchor wave level support over here. So you can see after this kind of support, the market clearly rallied up here. Again, retraced back, and after this bullish candle also you could have taken position, or you could have taken your position if you try to plot this retracement, the high to low here. So if you try to plot the common point between this to the common point between this, you can see once the market has crossed the 0.5 level towards the upside with impulsive momentum, and you can see this kind of support. After this support, the market broke towards the upside. In case if you might have shortly scalped also, you could have entered keeping your stop loss just below that candle and targeted all the way to upside. So I will show you how you need to target towards the upside. So the common point between this to the common point between this, common point between this, you could have targeted all the way to 1.68 level. This is another target where you could have done it. This is the retracement only. Now I'll show you the fib retracement level, how this works. So in case if you consider this whole structure as one thing, one swing, and this is the retracement. So if you try to plot the Fib extinction levels, the common point between this to the common point between this to the common point between this, the market couldn't reach the 100% move. So let's redefine how this market would have behaved. So if you consider this swing structure, right, you can see 100% move here, or you could have just targeted the order block level, guys. You can see here the main, you can see this is the order block level. This is where the 1 minute order block lies. So the market came all the way to order block level since it broke the 200 moving average as well as the day VWAP level towards the upside. You can see this is the last up candle before the down move where the price clearly broke structure towards the downside here with fair value gaps, which is a clear order block, guys. So you can see you could have targeted all the way to this order block level also. So this is the 1.68 level or the order block level. So it's better to target the order block level, guys. Sometimes when this kind of price action, which no proper retracement to zero point 0.5 as well as zero point 0.3 zones, you can't expect good momentum. So here you can expect the as the price retrace to 0.38 levels, but here you can see the market retrace to this fair value gap, which doesn't signify any golden zone ratio support or anything of that sort. And you can see here there is another kind of channel formation here, clearly indicating bearishness. After this bearish candle, you could have seen that the market will try to head down, but here it took support and it broke towards the upside, and you can target that position as well. And this order block level, once get mitigated, loses its value. But here you can see this order block has been mitigated, or you can consider the last up move, which actually broke structure towards this downside as well, or you can consider this order block level. Or you can see the market faced rejection from this order block level and continued towards the downside. And in case if you place the anchor way up level here towards the top, you can see that the market is trading below that zone, clearly indicating some sort of bearishness. Um, and you can see the market clearly broke towards the downside as well, the day VWAP level as well as 200 moving average, and retraced back. You can see this kind of retracement, guys. When you see this kind of retracement and price rejecting from day VWAP levels, you try to plot the Fib levels here, the high to low of this zone. So if you try to plot the high to low of this zone, you can see the price clearly rejecting from 0.38 level here. Can you see, guys? This is a 0.38 level. So in case of market sentiment, clearly more bearish. As you can see, the market here is very bearish only, guys. So here also you can expect the market to be bearish only. So this was just there is much impulsive momentum. As you can see, there is a balanced move for market rallying towards the upside. So after this rejection at 0.38 level over here, this rejection, you could have just taken short position. And in case if you have plotted the Fib extinction levels, the common point between this to the common point between this. So if you see here, you could have first targeted the 100% move or the 1.68 move. Or in case if you could have targeted all the way to this 1 minute order block, guys. So for just quick scalping, in case if you want to scalp, you could have taken short position just here, guys. This is how you could have taken, keeping your stop loss just above that impulsive candle over here, the last up move, which clearly broke towards the downside, or the zero point 0.5 or 0.6 golden zone ratio. And you can target all the way to this zone, guys. In case if you might have just holded on to your trade and see in case if the market closes above the 21 moving average, you could have just holded on to your trade and targeted all the way to the 1 minute order block. And you can see here the market came all the way here and rejection of price here. You can see clear dodgy candle and another candle forming some kind of impulsive, clearly breaking this, piercing this bearish candle, clearly indicating some sort of bullishness. Or in case you can see the market clearly even came all the way to this zone, formed this kind of chalk formation. The price didn't actually close, but in case if you try to plot the Fib levels, the common point between this to the common point between this, you can see the market after this impulsive momentum still took support from this zero point 0.5 level. This is the 50 level 0.5, and if you try to plot the anchor way up level here, this swing low, you can see price taking support from this. And if you try to plot the Fib extinction levels, the common point between this to the common point between this to the common point between this, look at this, guys. You could have targeted all the way to 1.68 level over here. This is the 1.68 level where you could have targeted and taken long position just here, keeping your stop loss just below the 0.5, 0.6 candle. And you could have targeted all the way to day VWAP level or the 1.68 level. This is the anchor VWAP level, guys. So let's take this out and let's take this also out. So after this impulsive momentum, you can expect some sort of demand over here. So in case if you plot some kind of demand, this might be some demand zone. So you can see the market again, TGC came all the way to this demand zone and clearly broke structure towards the upside. And after seeing this kind of momentum, so if you look, uh, Here no, in premium charts, guys, when the price came all the way here, and in premium charts, it formed a bullish engulfing pattern over here, piercing this candle, even though it formed a dodgy here, it formed a small candle. But in premium charts in both Nifty call option premiums, guys, it formed a bullish candle, bullish engulfing pattern, clearly indicating some sort of bullishness or demand over here. So in case if you might have taken long position, you could have easily taken here. Or in case if you try to plot the anchor VWAP level here, guys, once the market broke this structure towards the upside, you could have taken long position, keeping that anchor, this candle as a stop loss. And if you see after this impulsive momentum towards the upside, you can see market trying to take support from this 550 level over here. This is the 550 level. This is the 550. So the market took support here and rallied towards the upside. Again, the market came here, took support over here from the 9 as well as 20 moving average, indicating some sort of bullishness. You can see this kind of consolidation, guys, and this kind of consolidation. In case if the market sentiment here would have been bullish, no, guys, the market could have easily, after this impulsive momentum, consolidated here and continued further like this, guys, to reach all the way to this zone. But you can see the market here after this candle, this bearishness, guys. You can see this zone over here showing some sort of bearishness over here. You can consider this zone only. So you can consider this zone being bearish only. So the market couldn't cross from some kind of bearishness over here. So in case if the market would have been broken, if market would have broken this high, guys, there would be high chance of closed above this high, there would be high chance the market would have continued further buying. And you can see the market after this bullish momentum formed another bearish candle and closed even below this, clearly indicating bearishness. So there are high chances the market is continuing further towards the downside only. Since a lot of sellers might have been profit because those people who might have sitting here might have to just trial the stop loss all the way to here, or in case if the market tomorrow targets the sellers, there high chance the market would rally upwards, or else there is a good chance the market will continue further towards the downside. And you can see this order block also has been mitigated. So only this order block has some significance. If the market flat opens, takes support here, there's high chance the market goes. Or in case if the market closes below this zone, there is a very good chance. You can see the market has another fair value gap and the order block levels over here. So the high chance the market will mitigate these fair value gaps and these order block levels to reach all the way towards the downside as well. This is about my bank nifty trade analysis, guys. You can see here. You could have even taken this long position here, keeping your stop loss just above and targeting all the way to this zone to the daily wrap level, or in case if you try to plot the fib extension levels, if you consider this whole thing as a swing. So if you try to plot the fib extension levels, the count point within this, to the count point within this, to the count point within this, you could have targeted the 100% move here. This is the 100% move. So you could have targeted all the way to this zone, guys. Okay. This is the trade in Nifty, Bank Nifty, guys. You can see you have got what I'm saying, guys. Why you have taken short position here. There were three confluences, guys. Here you can see this 200 moving average. Usually it plays a significance, and the market trying to rally all the way towards the downside, and you can see this kind of consolidation, chop, chop. Again, the market came, break this high, again consolidated 0.3, broke towards the 100% level. Again, you can see this kind of retracement. This kind of retracement usually implies bullishness, guys. You can see. So the market consolidated. If you try to plot this consolidation fib, if the market breaking above that fib, you could have targeted all the way to 1 minute order block zone. And here the market rallied all the way to this zone, to this 1 minute order block, mitigated this zone, and you could have easily taken this position also, guys. The long position here and traveled all the way to daily wrap level also. This is also one trade, but better confluences are here. So you could have taken here also, or this order block level also. This is about my this is about my day analysis, guys, of Bank Nifty. So let's look into Nifty 50, how the market here actually behaved. So here though the market is kind of disturbing, as you can see here, that the market clearly gapped up, even closed above this yesterday's close level, rallied all the way down towards the pivot levels. So in case if the market sentiment would have been bullish, no guys, you can see the market clearly formed some very good demand over here, rallied all the way and continued all the way towards the upside. This is how the market would have behaved in case if the market sentiment would have been bullish. But here you can see after this kind of bullish candle over here, this bullish candle is a manipulative candle. As you can see, if you should always try to plot the low and high of that candle, And you can see the price couldn't even cross this 200 moving average. In after that, the market faced rejection here and continued further towards the downside. So in case if you plot the anchor VWAP level here, the high of this candle, you can see after this candle, in case of another candle would have formed and clearly broke this high, and the market would have retraced in this pattern, then you could have taken long position, guys, keeping entering here and targeting towards the upside. But here you can see the market clearly broke and closed below this low also here, as the market couldn't even cross this 200 moving average, the day we have level as well as 9s21 moving average. After even this impulsive momentum also, the market clearly broke towards the downside, clearly signifying bearishness, guys. So in case if you might have taken short position here, you could have after this impulsive candle, which you can see one failure of bullishness, another failure of bullishness candle, and you could have just entered short position, keeping your stop loss just above this 200 moving average or above this high only, guys. So there is a very small risk to reward ratio, and you could have targeted all the way to, if you try to plot this fib extinction levels, the count point between that, the high to low. First target you could have taken at the 1.68 level. Here you could have exited your first target at 1.68, or the second target you could have targeted all the way to 2.68 level. You can see how the market came all the way to 2.68 level, guys. This is how the market usually behaved, and you can see how you could have easily targeted this kind of positions. And you can see the market here after this kind of bullish momentum clearly didn't even break this high also. This is just a bullish momentum, guys. But here you can see the market clearly broke towards the downside. Here, here you can consider this to be a break of structure over here. And after this break of structure, the market kind of consolidated, came all the way to this order block level. And this order block now has been mitigated. You can see the order block mitigated over here. And even in case if you might have taken short position here, you could have kept your stop loss just above that fib of that 1 minute order block and targeted to this low over here. But you can expect some sort of demand over here. You can see as same as Nifty 50, Bank Nifty, the demand zone over here. So the market came all the way to this demand and rallied upwards. This was just a small scalp you could have taken. But you can see this kind of consolidation, guys. I have told you when there is some kind of bullish momentum with fair value gaps and market consolidates in this pattern, there is high chance the market would continue very bullish. You can see this kind of consolidation, guys. After this kind of impulsive momentum, this signifies bullishness, and I will show you the same pattern where it happened. But here you can see this kind of consolidation here. I'll show you in Nifty 50, Bank Nifty, guys. I want to show you that kind of consolidation where the market yesterday also behaved. You can see this kind of consolidation, guys. I have told you, look at this consolidation and market trying to break towards the upside. And the same thing happened here, this kind of consolidation, clearly signifying bearishness. So in case if you try to plot the fib levels of this consolidation and target towards the upside, if you consider the high to low here, you could have targeted the 2.68 level, or you could have easily targeted the VWAP level, guys. Here, the 200 moving average or the VWAP level here. You can see how the market came all the way here. You could have just kept your stop loss just below that demand zone over here and targeted all the way to this daily gap level. Or after seeing this kind of impulsive candle and this rejection candle from this 9 as well as 20 moving average, you could have entered long position here, targeting the 200 moving average. After this impulsive momentum, clearly the market broke this high, showing some sort of demand. So if you try to plot the fib levels, the common point within this to the common point within that. So you can see the market try to take support from the zero point 0.5 as well as zero point 0.6 levels. So this is the 0.50 level over here. So this 50, so in case if you plot the fib extinction levels, the common point within this to the common point, within this, you can see the market came all the way to zero point 0.5 as well as zero point 0.6 level over here, clearly indicating some sort of not so bullish momentum. In case if the market sentiment would have been bullish, no guys, the market consolidated here. You can see this kind of consolidation, and again the market would have tejisly broken towards the upside, but you can see clearly the market broke towards the downside here, clearly changed the market sentiment from bullish to bearish. You can see the market clearly formed a chalk here. So here you could have entered short position here, keeping your stop loss. The market kind of retraced short position here and targeting all the way to this low or any fair value gaps. So here there is a little bit of fair value gap. So you could have just targeted in case if you try to plot the fib extinction levels, the high to the low to the high, you can target the 1.68 level, or you could have targeted all the way to this zone, guys. Mm, Let me plot the fib extinction levels. You can see the market clearly broke again here, clearly indicating break of structure over here. This is the break of structure. And if you try to plot the fib levels, the compound high to this low, you can see the market face some sort of rejection and from the kind of rounding top at this zero point 0.3 level over here. This zero point 0.3 level where the formation of rounding top clearly signifying some sort of bearishness over here. So I have taken short position guys here after seeing this kind of rejection candles from here after this kind of consolidation. I expected the market would rally towards the downside. You can see this huge rejection candle, another rejection candle, another rejection candle. So in case if you might have entered short position, you could have kept your stop loss just above that candle. And if you draw the fib extension levels over here, the high between this zone to the low here to the high of this zone, you could have targeted all the way to 100% level. Look at this guys. The market came all the way to 100% move over here. So in case if you might have targeted, you could have gone here, short position, and here you could have targeted somewhere between these zones. Or in case if you might have just holded on, seeing the price rejecting from 21 moving average, you could have holded on to your trade all the way to this zone also, guys. But it's so very difficult. So in case for scalpers, I think this would have been the best trade. And here you can see it followed same as Nifty 50, where the price, Bank Nifty, the price here at this zone reached the 1 minute order block in Bank Nifty, guys. You can see after that they formed a bullish engulfing pattern, as I've told you here. In premium charts, but in spot chart, you can see it didn't form that kind of bullish engulfing pattern. So you could have taken long position here, but in case if you might have placed the anchor way up level, you can see this kind of support, this kind of support, another kind of support. So looking at these support zones, you could have taken long position. So in case if you try to plot the fib extension levels, they can't find it in this, so they can't find it in this, so they can't find it in this. You could have targeted the 100% move first, and the market again came to this zero point 0.5 as well as zero point 0.6 level over here. Again, if you try to see, this is the 100% move over here. So in case again, you can see after this kind of demand over here, the market again took support from zero point 0.5. So in case if you want to plot another fib levels here, you could have targeted all the way to 100% move here. This is how you could have targeted. This is a 100% move. So one long position where you could have taken was at this zone, keeping your stop loss just below that candle and targeting all the way to 100% move. And the price coming here to this 50 level, retracing back after this impulsive momentum. You can see price trying to take support. So in case if you might have taken another long position, you could have taken here, keeping your stop loss just above that candle and targeting all the way to the 100% move. This is how you could have gone, taken your trade. You can see this kind of momentum here. This is just a manipulation. So it went all the way to 100% move here. Look at this trade, guys, in Nifty 50. As I have told you how the market has behaved and how you could have targeted all the way to this 2.68 level, this fib of this retracement. This is about Nifty 50, guys. I think one such beautiful trade is enough, guys. It is done for the day. You could have made a decent amount of profit. Um, what I'm trying to teach you guys is that I hope that you are getting what I'm trying to teach. So you better try to apply what I'm saying, guys. How to use the fib levels, the anchor wave levels, and you should also learn how to use the RSI levels, guys. Hopefully, I will with premium charts. I will try to explain how you can use RSI also. When the price is trying to consolidate here, and if you try to see the RSI levels, so let me try to use RSI and try to explain. So you can see here, guys, how you can trade RSI over here. So you can see here after this kind of bullish momentum and the market clearly broke towards the downside. Whenever the bearish sentiment is there, the RSI levels will be less than below the 50% of this zone. You can see whenever this kind of impulse, look at if I'm taking short position, guys, you can see the market will definitely show some kind of resistance over here and formed a sort of bearishness of here. So you could have just kept your stop loss just here. Or in case if the market sentiment would have been bullish, you can see, as I have told you, that in case if you want to take long position, you could have kept your high to low. After breaking this candle and price rejecting, you can see at the same time, the RSI level is above 50 level over here. You can see here at the same time, after this confirmation, guys, this candle confirmation you could have taken. And if you see at the same time, the RSI is trading above the 50% zone. So you could have just taken long position over here. And here also, you can see this kind of, if you try to plot the high to low here and the market trying to consolidate here, this also the RSI level is above 50%. So you could have taken long position. But you look at this short position, guys, here. The premium though here Lazy shift felt all the way and retraced back here, but couldn't cross these levels. And you can see this kind of dodgy candle over here, price rejecting from 200 moving average as well as 921 moving average. After seeing this candle, you can see at the same time that candle also the RSI is above 50%, clearly indicating bearishness. So with this confirmation candle, you could have taken short position. And you can see here also the whole zone, this the whole zone is trading below the below the 50% of the RSI, clearly indicating bearishness. So I use the 50, 30, and 70% only, guys. It is a default. And you can see after this candle also the RSI is above 50%. You could have taken long position here, trying to target towards the upside. And here also you can see this kind of consolidation. This so the market is quite fractal. So it's better, guys. So when you know how to use RSI also, it's better. That so with better confluences, you can use RSI to take positions over here. So you could have easily taken that short position here all the way and traded all the way here. You can see even in this consolidations also the price couldn't cross the 50 levels over here. Not 50, they are 50% of the RSI. Clearly this consolidation also is trading, indicating bearishness. But you can see here once the 50% has reached over here, you can see this kind of bullishness over here where the price showed some sort of bullishness. But again, the market here broke. Hmm. With a lot of practice, you will get used to know how to use RSI, guys. I think with better examples, I will let you know how to use RSI. So for time being, you can look at this price action, the VWAP levels, the 200 moving average, the demand and supply zones, chalk order block levels, fair value gaps, and inducement levels, PDRS. And this is what you need, guys. I think this is enough for you. And this channel formations, you can see this kind of channel formations is also important for you to make trading decisions. Um, I hope you're getting what I'm saying, guys. In case you find my videos valuable, please like, share, and comment. And thank you, guys.